It's the interview series. The interview series. It's the interview series. It's the interview series.
Welcome to the interview series, where the mission of this podcast is to add value to as many people as possible. As a realtor, investor, and consumer, I know firsthand there's a lot of information out there and not a lot of time to verify it and even consume it. So I created this podcast to ensure you have the information, resources, and knowledge to alleviate any stress as it relates to finances, real estate, and more. So with that being said, let's jump right into it. Today it's an honor to introduce and interview Brad Eskra. Brad, you're a mortgage broker, right?
Yep.
Welcome to the interview series.
Thank you for having me.
You look, you're born and raised in Sonoma County. Obviously, you lived here your entire life. Been in the mortgage industry your entire career since you started when you were 16?
16 years old.
16 years old, so really early. Married with 3 children, beautiful family. You love spending outdoors, time outdoors, camping, fishing, skiing. And I kind of love your philosophy on life, right? The kind of person that's always there to help others. And you said, you and your wife have this, the same values as it relates to, respecting each other, respecting others, and to really have model that in your household, right?
Absolutely.
Cool, man. So let's just jump into it. Obviously, I mentioned you're a mortgage broker, and let's just start at the basics. What's the difference, right? Like, if I'm starting out and I don't know anything, right? What's the difference between a lender and a mortgage broker?
Yeah, so there's a lot of information out there. Years and years ago, everybody thought a mortgage broker was the bad guy, or they're more expensive, whatever it was.
Of course. Yeah.
The reality is a broker and a lender essentially do the same thing.
Okay.
Right? We're both obtaining a mortgage for an individual trying to buy a house.
Got it.
We just go about it in 2 different ways.
Yeah.
So when you have a direct lender, the direct lender works for one company, right? We got one company. They offer the products and services of that company and that underwriting team.
Got it.
Whereas a broker, I have relationships with multiple companies, so I don't only go to one company. I have 10 to 15 different companies that we can send your mortgage to. So one company might have a better rate on one day. One company's guideline might be a little more restrictive than the other. So when it comes down to a lender versus broker, brokers have more opportunities. Lenders, it's kind of black and white, right?
Yeah.
Live your life in color or live it black and white. That's
Yeah.
my difference in a lender and a mortgage broker.
I like that, and I mean, I know we've worked together on multiple times,
Yeah.
and I've called you all the time for questions, and so like, if you're not me, right, and you kind of answered it just now, but like, what are the benefits? You did mention it, but what are the benefits of choosing a broker over a lender, outside of the fact that you have?
I think the number one thing is the opportunity, right?
Okay.
We can break opportunity down into multiple things. So we might have a company that we do business with that offers a lower down payment than a direct lender.
Okay.
Or our guidelines might be a little bit less restrictive than a lender. So the opportunity is that we can seek multiple lenders, I guess, for a client. With seeking multiple opportunities also comes rates, right? Rates are not determined by one institution. Every lending outfit has a different rate set.
Got it.
And as a broker, I can control certain parts of the interest rate, right? So there's just so much more opportunity as a whole. You got rates, sometimes more flexible guidelines, and for me, just better service, right?
Yeah.
I've worked in the direct lending environment before, and I chose to become a broker and open my own brokerage because it enables you, one of your clients, myself, to obtain a mortgage in a different way than through a direct lender. It's much more client focused, I would say.
Got it.
Whereas for me sometimes, and this is not always, but direct lenders are more institutional.
Okay.
Right.
All right. Well, so I mean, anytime you think about it from a consumer's perspective, right? Like, it sounds like you want to have the more advantages going into when you're thinking about going into the market. So what I'm hearing from you is that you just have more opportunities than if someone were to just stick with a direct lender. So, anytime you can get a competitive advantage, I'm right there with you. So, which is why you get pretty much a call from me like once a week. So. And so what about with that, like everyone has their own process. As a realtor, I'll sit down with my clients, we'll talk it out. I'll kind of give them a buyer's consultation, a seller's consultation, and this is Jeff Fuller's process on how I'm going to handle them, right? Another realtor might do something different. Also, I look at myself as an investor, so I have a different lens, right? So everyone has their own unique perspective when they're sitting down with their clients. So tell me, not the lending process, but your lending process.
My lending process.
Like, what do you do? How do you make sure that someone that's coming into it, whether they're a first-time buyer, experience, like you sit down with them or you Zoom in front of them and just kind of say, here's from step by step from A to B, from A to Z.
So I don't hide behind the computer. My preferred method of communicating with someone is to have a conversation.
Yeah.
So I think it's much more personable. When I start the lending process, I want people to know that this is not a hard process.
Okay.
It's an easy process.
Yeah.
So how can I break it down to make this the easiest transaction or step in their life? Because a lot of people here, it's a daunting task to go buy a house. And they've heard stories from their friends or family or coworkers that they had a horrible experience with a mortgage. When I sit down and do something, I have the conversation, get to know somebody, and we go through the process then. I explain it to them. I have 3 simple things that I go through with a mortgage just to kind of lay it out for everybody. You have your down payment, you have credit, and income. Those are the 3 most important things. And we can just kind of lay it out that way. When you go into the process, we'll discuss it over the phone and then follow up with documentation, just so that we can verify with what you're telling me is true.
Got it.
But really the process it's fairly simple. Like I said, my take on this is hands-on. I want to be hearing about what you have going on, about your work. A lot of people will want to do an online application, but you don't really get that much out of an online application because it's all in just black and white. I can't ask you questions back if you're giving me information online.
And then vice versa,
So
they can't ask you
can't
questions.
ask me questions
Right.
either, yeah. So then it turns into a more, I guess for lack of a better word, drawn out process, right? Now you're spending hours and hours communicating back and forth. And if people want to communicate with email or whatnot, I can lay out a template. I just want to make it as easy as possible for them.
Yeah.
Give them the basis of what they need, and then we take it from there.
Yeah, simple is better, right?
Yeah.
And then I always have a question. I know my clients always have a question, so I think this is a great platform for all the people that are out there listening. The difference between like a pre-approval and like maybe a newer term, but a verified approval.
Yeah.
And really 2-part question. First question, difference between a pre-approval, verified approval, and then how long does it last?
Right. So verified approval, in my opinion, it's like you'll see it a lot lately as the market's been changing.
Yeah.
A verified approval is a marketing slogan that some bigger companies, I won't mention company names, but you might see it on a commercial these days. Okay. Essentially, what we were just talking about before, how I have the conversation with you, go over the 3 main things. That's just me taking the information from you and putting my knowledge and my years in this industry to know whether or not you're going to qualify for a mortgage, knowing the right things to ask for. The verified approval takes it one step further, and they have an actual underwriter look at the file, right?
Yeah.
So in any mortgage transaction, after you apply with me or one of your clients apply with me, once you're ready to start the process, it goes to an underwriter who's a person that verifies all of the data that I've collected from you.
Okay.
So a verified approval is the underwriter taking it a step further to say, hey, your client really is approved.
Got it.
Not just me saying the client's approved.
Got it.
So a pre-approval, the exact opposite. That's me looking at your information, saying you check the boxes and you're approved for a mortgage. And we outline the terms for it.
Okay, great. So circling back, Brad, around the pre-approval process, like how long does that take? Pre-approval, verified approval, how long does that last?
So the pre-approval process up front can be as quick as like 15 minutes.
Okay.
Right? You can do it relatively quickly. Once you have a pre-approval or the verified approval, the main things that go into it are what the interest rate is that you're qualifying for at that time, like how much can you afford in relation to your income, and then your credit score, things like that. So as long as when I issue a pre-approval or you have a verified approval, whichever approval that you have, it's going to be good as long as you still qualify. There's not been any major changes. So it could last for up to 6 months as long as rates don't spike up, or as long as your credit score doesn't get harmed. So as long as you're maintaining the same factors that we're looking at up front, the approval can last indefinitely in a way.
Okay. And then what, like, you did mention the factors that can, I guess, disqualify someone. Let's talk about interest rates, because those are fluctuating. And so how does that impact it? So you get pre-approved on a Monday at just 5% and interest rates go up to 6.
Yeah.
So you're saying that a pre-approval no longer counts, or like how does that work?
Here's the easiest way to put it into perspective, and I'm just going to use even numbers so that the math is there.
Okay.
In most mortgage situations, not all, but in most mortgage situations, whatever your mortgage payment is and any other debts you may have on your credit report, so say you have a car payment, whatever, all of those debts are usually allowable up to around 45% of your monthly income gross. So if you make $10,000, your client makes $10,000 a month, we can qualify them up to $4,500 a month in debt.
Okay.
So when we look at that, if the day that I approve a client, the mortgage payment fits into that ballpark based on interest rates, they're great. But if 3 months or 6 months down the road, interest rates spike up, or they take on new debt like auto loans and it starts going over that threshold of 45%, that's going to be a disqualifying factor. Or if they lose income, maybe they had to change jobs or something. So it's those kind of things, as long as they still fit.
So there's a ratio.
There's a ratio.
There's a ratio, or you can convert that to a percentage that keeps them within the qualifications or potentially disqualifies them. So that's, okay, that makes sense.
Correct. So the variable factors are going to be the interest rates and whether or not you retain your job and the earnings that we looked at up front.
Okay.
And that's going to be the same with the pre-approval versus verified approval, because when you're issued that approval, it's what's happening today, not necessarily what's going to happen in 6 months or 2 months, whatever that time may be. Because if you're in the middle of a mortgage process, even when you're already approved, if you lose your job, that's a deciding factor. If you don't have income, regardless of whether you have a verified approval or pre-approval, you've got to get another job to show that you can repay your debts.
Yeah. If I'm a client, or just, if I'm one of your clients, my thought when you're sitting me down step by step and you're explaining all this with, conversations in the media about interest rates and the reality of it, I'm thinking, okay, well, he's locking me in or pre-approving me for this at whatever interest rate. Is there a way for us to kind of prepare for interest rates spiking, knowing that if I keep my job and all the finances here, that even if it does spike up 2%, like, although I'm not pre-approved for it, I know that I will be. Is there preparation or talk about that? Like, knowing that, interest rates, I'm 2%, I just threw it out there, but do you prepare your clients for the potential change?
It's always, you always let them know what the interest rate markets are doing and how it works, and when you can lock into an interest rate. The interest rates are like the stock market. You hear the stock market up and down every day. So sometimes we see interest rates get better 2 times in one day. Sometimes we see them get worse 2 times in one day. And they change every single day. So it's hard, but you always go over a range with people. And one thing that I talk to clients about, I could usually approve a client on paper with how mortgage guidelines work for a more expensive mortgage payment than what they want to pay, right? So what I do in one of my conversations, what are you comfortable paying? Then we look at how that fits into their qualification. A lot of people we can qualify with 2 household incomes for a $5,000 mortgage payment. And they go, whoa, Brad, we're talking like $3,500 range, right? But then what I tell them, that gives them some flexibility for the markets to move around, and we discuss all of that.
Got it.
So
okay, no, that makes sense. I appreciate that.
But where it really hurts someone is the person that's trying to qualify for the max amount that they can, because that's where you start to see issues with rates rising.
I see what you're saying. So that technically answers my question. You kind of already know that they can.
They have some buffer.
In your example, they're like, hey, 35 is my max, but you know that they can do up to 5,000. So if for some reason it gets in between that, hey, how does 38 feel? They can.
If we see a move in interest rate, we know that it's not that tight. If we see someone that's tight on the qualification, going back to the relationship with the realtor and the broker, that's the first thing I tell you when we're talking, hey, this is going to be tight. This is what we need to keep in mind. This is what we have to do.
Got it.
This could be a factor. So.
That's helpful. So for the audience to know that there's someone out there from your perspective to that is preparing them for the good, the bad, the ugly.
But
and
it helps
the
you in what
reality
you
of
have to
it.
do too,
Yeah.
because like it may be a more dire
Yeah.
need to find them something soon, or to find a certain property or seller that's willing to negotiate. All of those things play
Yeah.
into factor.
Yeah.
Again, relationship. It's all about the relationship, communication.
Yeah. A kind of just a random question here for you. I have clients that are, okay, I'm looking to buy in a year and a half, 6 months, 3 months. How soon would you say for someone to get pre-approved, right? If they're in the process? Because some people are like, I'm looking to buy next year, which
Right.
next year could be 6 months, a year, or even 3 months. Like, what would be your recommendation to someone that does this
How
every day?
soon they talk to
How soon
someone?
should they talk to you
Yeah.
or even get pre-approved prior to jumping into it?
I mean, it's always smart. Things change so quickly, so it's always good to look at the market right now and look at your financial situation now, because you might think you're ready, but you might really not be ready, and there might be some things that you need to work on. Because we got to remember, without going into too much detail, but your credit score might not be up to par with getting you the best rate. So there might be things, if you're going to be a 12-month prospect, that you could be doing things to maybe pay down some consumer debt. Let's look at how we can get you the best rate.
Yeah.
Get that credit score up or save more money. You know, it's always good to go over your financial situation. You don't talk to your financial advisor one time, right?
That's true.
So it's kind of the same thing, because the house is the biggest purchase of a consumer's life.
100%. 100%. And then, I mean, briefly explain, like, what are the cost breakdowns of a mortgage, right? Like, I'm not going to hold you to it. No one that's watching this video
Right.
is going to hold you to, hey, you told me it's going to be this
Yeah.
down to the penny. But, like, because outside of, the norm, what are the costs? What are the breakdowns? What should someone expect?
So again, to make it very simple, there's closing costs when you buy a mortgage.
Okay.
Everybody thinks the closing costs are all in the mortgage person's hands. It's not that way. So what to expect, you're always going to pay fees to the lender. So most lenders charge an underwriting fee.
Okay.
And then every time you buy or sell, you have to have a title company involved, right?
Yeah.
So the title and escrow has its separate set of fees. So they're all tiered based on how much of a house you're going to buy. Standard fees, I would say, given somewhere average in Sonoma County around $700,000-800,000.
Got it.
You're probably looking at $7,000 in actual hard closing costs.
Got it.
And the buyer typically pays those.
Got it. And that's part of your communication when you're sitting down and talking to them on what to expect, right?
Absolutely,
Yeah.
right? And then we kind of go over the client's financial situation, and if, especially in this market that we're seeing right now, if maybe we need some assistance from a seller and getting credits for closing costs. Once I know their financial outlook, then I can go back to you and say, hey, here's what we're working with. Maybe we should try to get some money from the seller, or how are we going to be competitive together in putting the best offer forward on their property.
Got it. That makes sense.
So yeah, $7,000, $7,500 typical closing costs. There's some additional items for taxes and insurance that could put it up. So I think, anywhere from $7,500. If you add taxes and insurance, $12,000 somewhere in there.
Yeah.
But it's really detailed and it's specific to each client. So
Got it.
I think I would go with the base and then reach out to us if you want to know some more details.
For sure.
Yeah.
I would love to, at the end of this, ask you kind of where they can find you. So start thinking about what you want to tell them, and your phone number, what to contact, Instagram. But after you go through step by step, with your client, the process, and you're educating them, I'm sure there's lots of questions. So what are the most common questions that your clients typically have for you after you kind of sit them, or maybe even before, sit them down and talk to them through the process?
Surprisingly, you'd think it would be, what are your interest rates?
Yeah.
But I don't get that question that often. We're usually pretty competitive on rate. I think
Are you finding people, sorry to cut you off, are you finding people know the interest rates already, or just not concerned with the interest rate?
This will segue into what I was going to say next. Most people will want to verify what they've read on the internet or what they've heard from someone else.
Got it.
So a lot of the questions and things I am dealing with are something that someone else may have experienced, or one of their friends or family may have experienced in a transaction. And it's really just verifying data that they've either read or heard from someone else.
Got it.
I mean, really dispelling myths that a lot of it's not true, right? When you read something on the internet. Right? My wife does it all the time with our kids.
Yeah.
Hey, my son's got a sore throat. And then she goes on to WebMD, and it could be 50 things. So the internet's the same way with mortgages or real estate. For
sure. Yeah.
So it's attention grabber. But a lot of people are concerned with what they've heard, just making sure that they're understanding the process. Big thing is down payment, right? When money is tight, or first-time home buyers.
Yeah.
the biggest misconception is you have to have 20% down.
Got it.
So a lot of people are concerned with what their down payment has to be, and you can go in with as little as 3% down on a mortgage for a first-time home buyer.
Got it.
So just a lot of basic questions.
Yeah.
Yeah.
Okay. And then your expertise, you've been doing this all your life since you were 16.
yeah.
It's been a while.
Let me clarify, I haven't been originating mortgages since I was 16.
You've been the game.
I was copying papers.
You're
know,
copying
just putting
papers.
it through.
Yeah, I love it. No worries. I think, obviously, but you've been in the game. You've seen it
Yeah.
all over the last few decades, let's call it, right?
Yeah.
And so where do you see the market going in 2023 from an interest rate, home price perspective, or more?
This is a tough market right now. It's been different because at the end of this year we've seen interest rates spike to the highest that we've seen in a long time.
Yeah.
But house values are still maintaining. So as many people hear, the feds keep raising interest rates. It is not directly to like a mortgage rate that you would obtain from me.
Yeah.
So they're raising rates in other places to try to combat inflation, the cost of everything now. Yeah. So as they keep doing this, I think rates are forecasted to come back down. You know, we should see probably within the first quarter of 2023 them come back down to around 5%, which most people are going to be jumping up and down for that. Not quite what we saw the last couple of years, but I think that the market is trending back down in terms of rates, and a lot of people are looking forward to that because then it'll maintain values. But everything I look at, real estate should maintain. If for some reason rates don't come back down, as you know, selling, buying prices are all determined off supply and demand. So I think the interest rates are going to dictate the stability of houses. But let's face it, even if house prices come down, they always ebb and flow. It's not a bad investment to get into a property.
100%. I mean, I think relationships are everything, right? So like you meet your client, you potentially got that client from a realtor. So talk to me about the importance, if you will, briefly, between your relationship and me, right? We're the realtor, right? So because we're a team, right? So what's the importance of that for the client?
Well, it's like any other sport you play. If it's a team sport, you have to count on the person next to you to do their job, right? So when you're out there looking with your clients and your clients are trusting you, if they're working with me, you have to trust me as well. Because the last thing you want to do is put your client into a contract and then have the financing fall through. They can't do it, right? And it happens. We don't see that happen that much because we vet a lot. Sometimes there are things beyond your control, but for us to have open communication, all it does is better our relationship and the experience for our clients, right?
For sure.
You know, you trusting me and me trusting you helps the entire process, and the end result is the client. The client's gonna have the best experience if we're both the most knowledgeable that we can be in the situation.
For sure. What advice would you give those who are looking to buy their first home or even like just grow their real estate portfolio?
Don't wait. That'd be the first thing I'd say. Don't wait. I mean, real estate is, depending on how you're using it, but mostly it's a long-term gain if you're going to use it for investment purposes. But I think don't wait. The time is now. You could put things off as long as you want. And always say there's going to be a better time, but for me, the time is now. I mean, sit down with the broker, sit down with the realtor, look at what's out there on the market, look at what you can afford now, and if you can't afford it now, kind of going back to what we talked about earlier, look at what's your 12-month plan, what's your 6-month plan, but do something now to know whether you can make it happen tomorrow or you need to wait 6 months. But that's the first step in going about it, in my opinion.
I mean, I think, you know, a lot of people that will be tuning into this are interested in ways that they can build wealth. So like, can you share something that can inspire people to build wealth through real estate or just to build wealth in general?
I think it goes again to like, now is the time, right? I mean, if you look at a lot of successful people, they have real estate holdings. Not all, but a lot of people will put money into real estate because it's secure when you're doing it right. Right? We saw a lot of people lose homes in the last downturn in the market, completely different mortgage products out there. But if you're doing it right, it's a great long-term investment. And kind of, we were talking about this earlier, some people think it's not the time or they can't do it now. It's kind of like you going investing in a 401k. A lot of people don't have 401ks because they don't feel like they can contribute enough money. It doesn't matter how much money you contribute. Start small. Contribute a small amount. Same thing with the real estate market. If you want to get in, buy something small. And as you are in it and the market changes, then you look for next opportunity to grow, and you turn 1 into 2 into 3. I had someone tell me one time, it's not a matter of how many houses you own, it's a matter of how many doors you own. So that tells me it doesn't have to be a bunch of big houses that you have for rentals. It could be condos, it could be townhouses, it could be multi-unit properties. Just get in to have that established, I guess, safety net almost. You know, it's residual income.
Yeah. No, good insight. I think that's great. Anything else you have for the viewers? Anything else that you think that someone might want to know? Any horror stories you have for us that you've seen where you try to help?
We don't want to scare people with that. No horror stories with us. I mean, I've seen a lot in the time I've been in this business. But again, I think it's do your research, right? Talk to someone that knows what they're doing. Figure it out. Set a plan. I mean, you can't do anything without a plan. I think that's the number one thing you got to do.
My key takeaways are obviously to have a plan. You said that multiple times. I think that's key, and I just say the same thing with my clients. And ultimately, just don't wait, right? You know, because I do have clients that are like, okay, I'm gonna wait. Time goes by, and then ultimately, I think you might agree with this, right? Like people are waiting until interest rates drop. Right now, interest rates are high, so it's like, okay, right now it's not as competitive as it's going to be when they drop. So what you're essentially saying is, I'm going to wait till it gets more competitive again.
100%.
Right? So
couldn't have said it better. That's the thing. I have clients that waited in January, so a year ago now, because they wanted to wait and see what was going to happen with interest rates, or they didn't feel it was the right time. Those buyers are priced out now because we're seeing a whole different market. But along with rising interest rates, also it changes the seller's perspective. We're seeing a lot of sellers need to get more competitive in their sale. So we're seeing a lot of credits. So the market's ever changing. You can't only base it on interest rate or your payment, because there's a lot of payment factors that go into it. When you're renting versus buying, there are advantages of buying a home with interest and property taxes. So although it might seem a lot more expensive than your rental, it could again help you long term, could help you from a tax perspective. Talk to a CPA about it, figure it out. But you can't get sticker shock. You can't be walking to the dealership looking at that price because it doesn't tell the full story. People negotiate all the time. Mortgages aren't quite that way, but sales prices are, and dealing with a seller you can. But just don't get scared on what you're hearing or seeing on the internet. News, whatever it may be. It's not always accurate. So
100%.
I always tell my wife when we see something, day late, dollar short, because what the news is reporting happened like 2 weeks ago.
It's true.
So
100%. So I mean, it's been great, man. Thanks for showing up and you know, enlightening us. Your wealth of knowledge. I expect another call this week and another call next week. You've been great for me, so I appreciate you. And then where can they find you? What's the best contact
Our
information?
office is in Healdsburg, but by phone is the best way for me. So
sounds good.
I prefer email, text. I'll do it all. But I love talking to people. I think it really solidifies a relationship, and just it means more than just sending a text. Or once you establish a relationship, text's fine. Good, but it's always good to meet people, hear their story, really find out what they got going on.
Well, thanks, man. I really appreciate your time, and thank you so much.
Right on.
Appreciate it. Had a good
Thanks for
time.
having me.